She's an economist at Momentum Investments, and she'll be talking to us about how analysts have been raising these concerns ahead of the upcoming May elections. They are stressing that economic policy has become the politics of the day, and the 2024 polls have been described as a litmus test of bridging the historical racial and socio-economic divides. It's further noted that the current uncertain political climate casts a long shadow on the economy in South Africa. Sanisha, thank you so much for your time. It was a bit of a mouthful there, but just give us the gist of where economists are sitting in terms of what would dictate a political shift, particularly in policy where economics are concerned.
Thanks so much for having me. So I think the way that economists are viewing this very pivotal election for the country is largely in two major camps. I think the one camp is whether or not the ruling party manages to secure an outright win, an outright majority, so being that 50% plus vote, or losing just below that. So that means that they can take on a smaller coalition partner that still allows them to continue on the path of structural reform that we have followed for the past couple of years. The other camp is the one in which the economic ills and social ills that have not yet been resolved by our ruling party could result in them following a path of much bigger losses. And that could then involve taking on a much larger coalition partner. And we could potentially see a shift in policies, potentially to the left, if that coalition partner that is taken on board is someone like the Economic Freedom Fighters or the Mkhonto weSizwe Party, in which case we would see an adjustment to the path of structural reform in SA. We could potentially see an adjustment in terms of confidence and investment flows into South Africa, ultimately leading to quite a different growth path for the country.
The extent at which you explained the current dynamics of politics in South Africa, is it what the South African economy needs in the immediate term, especially as we are facing the infrastructure challenges from both the sides of Transnet as well as Eskom, but much more needs to be said about service delivery in maybe a dispensation that would be of a coalition nature?
South Africa finds itself in a very difficult fiscal quagmire at this point in time. So we do have, quite a stretched fiscus. We're in an environment where global growth for the next 5 years is going to be a lot lower than what we saw in the last 20 years. So we don't have that global driving force like we used to in the past. We're also seeing that Chinese growth model is also starting to slow, which means that the commodity price angle is not as lucrative as what it was in the past. Domestically, as you point out, we've got major issues with our network industries, being energy and logistics, as you've pointed out, but also the water industry. So what we really need to be able to do is fix some of these broken network industries to start generating a higher level of economic growth. But it's not just that easy, because we have to do it in the context of the fiscal ramifications that we are dealing with. And so some very hard policy choices have to be made in this regard.
One element that is often ignored when we talk about the politics of economics is that even opposition parties in their manifestos are basically making claim to a better dealing of South Africa's fiscus. They still have to basically get to the targets that they want or what they have promised with the budget that exists currently. How much of that is going to be a bottleneck for political parties as well as us as South Africans? So when we make that particular choice for a change, the budget will still remain the same in terms of tax revenue and what the fiscus looks like based on what is going in and what is going out of the South African purse.
Well, we've heard, from National Treasury on a number of occasions now that we are at that point where it's quite difficult to raise additional taxes given the state of the consumer and businesses in South Africa. So we do see that as almost a bit of a constraint coming through on the revenue side. I think where we can do a lot of tinkering is around the breakup of our expenditures and trying to rein in that debt ratio. So the higher the debt ratio in South Africa, it means that we have to service that debt. And when we service that debt, it means that money can't go towards spending on things like social delivery, which you've also mentioned has, created in the last couple of years. So going forward, we need to be able to exercise some growth aspects in the context of fiscal prudency. So that means, again, boiling down to those very difficult choices, ensuring that we don't just dole out money to state-owned enterprises on an unconditional basis, ensuring that we prioritize things like health and social security in an environment where the fiscus is already quite stretched, and in an environment where, we've got very low growth outcomes. Of course, fixing the network industries helps us to attain a higher level of trend growth going forward, which ultimately then would grow the economic pie and allow us to accrete more revenue going forward.
Growing that economic pie is essential, and it brings me to my last question, Sanisha, about South Africa's GDP growth then. At less than 1%, 2%, it is no growth whatsoever. So what is it that is needed to put a bit of fuel into this machinery?
Well, we believe that we'll see a slight growth pickup this year, going from the 0.7% last year to around 1% for this year, and then picking up to above 1.5% for next year. Given that the energy constraints are now starting to alleviate on the back of more renewable energy coming through from the private sector, but also a lot of the older fleet being fixed by Eskom themselves, suggests that the energy constraint will become less of a growth constraining factor going forward. I think where we are still hamstrung is really on the logistics side of things, and this could take a couple of years to fix. And I think our energy also needs to be focused now on a so-called looming water crisis, where we continue to face some challenges here. On the consumer front, we think that going into the remainder of this year, consumers could see a little bit of breathing room coming through, and that's as we continue to see interest rate cuts by the end of this year, with inflation continuing to fall. So the debt burden on your middle and high income earners should alleviate somewhat. And we have that real wage gap, which is your nominal wages minus inflation, also picking up towards the end of the year, allowing for more consumption spending to come through. Unfortunately, however, we can't rely on government to really bail out growth this time around. As we've said, we have quite a constrained fiscus, but we could get a little bit more on the export side, and we could get a little bit more on the fixed investment side, indeed on the renewable energy side of things.
Thank you as always for your input. Sanisha Packirisamy is an economist at Momentum Investments.